Well, again, I think physical demand has been very strong in Asia. There's a number of factors for that, but I think a lot of that even predates, some of the call it the volatility, policy volatility.
Yeah.
So I think, really we've been on a couple of years now, and it's really broken what used to be the old. When I was at Goldman, we always analyzed real interest rates as really the only factor, but now there's just a whole other geopolitical bid from central banks that I think the market's still, even in 2 years on, trying to get comfortable with what are the metrics to analyze that.
I am curious, though, about where exactly the demand is coming. There's been a lot of speculation, whether it's coming from governments, whether it's coming from traditional investors, whether it's coming from organized crime. There's been a lot of discussion about where those demand flows. Do you have any sort of clarity into where it's coming from?
Well, I think that's one of the other issues is it's not going through the typical, or not all of the flows is going through the typical way, again, buying from bullion banks in London, right? So even when the first movement started happening a couple of years ago, a lot of it was going through Dubai, a lot of it was going through Singapore, and not your traditional gold centers. And again, it's much more demand for physical rather than just having balance sheet gold, with a bank counterparty, for instance.
How has demand for gold in its different forms, whether it's physical gold or balance sheet gold, changed with the rise in demand for crypto?
I don't see it totally correlated. I mean, of course, after some of the political, policy changes around U.S. dollars, after Russia's invasion of the Ukraine, of course, that changed a lot of dynamics that probably affected both crypto and gold. But I really see them as very different markets. In fact, we still see crypto as very, correlated to, tech stocks and so forth, where gold really is, a physical safe haven that people look for. No, it's actually probably this.
Yeah.
There's two pillars of our company. It's why I started the business. One is to get commodity markets closer to physical, but second, to move collateral markets in real time. So my former colleague at Goldman Sachs, Allison Nathan, just put out a great report on stable coins, like literally today. And there's a lot of talk about stable coins for retail payments, retail holdings in emerging markets. But a far orders of magnitude larger use case is collateral, moving U.S. dollars in Asia or gold as collateral in Asia. And that's what you need for margins on, say, a futures trade. The Futures Industry Association actually just put out a great report about trying to move collateral to real time. And we really think we are going to be the first regulated clearinghouse in the world that will be able to do that with two upcoming pilots we're doing this year, moving tokenized money market funds in real time and moving gold in real time for collateral in Asia.